What if the entire financial system as we know it is on the brink of a massive change? Today, we're going to break down a market analysis that argues a huge, once-in-a-generation rotation of capital isn't just on its way, it's already started. Let's dive in. The analysis we're digging into today kicks off with this incredibly powerful statement. Right from the get-go, it frames the conversation not just as some market trend, but as this deeply held conviction that we are at a historic turning point. All right, so what's this parabolic prediction all about? In this first section, we're going to unpack the main idea that a massive, once-in-50-year shift of money isn't just coming, it's happening right under our noses. So the core argument is that this isn't your normal bull market. It's being presented as a fundamental monetary system reset. In other words, a time where people's trust is literally shifting away from paper assets, stocks and bonds, and moving toward real, tangible things like gold and silver. Now, this is a really important distinction in the argument. The perspective here isn't really that gold's value is going up. Instead, it suggests that gold is the stable thing, the measuring stick, while the value of our currencies, the dollar, the euro, all of it is actually going down. It completely reframes the whole conversation. So to build this case, the analysis first looks inward, right here at the US economy. This next part focuses on what it calls the cracks in the system, all the warning signs that it claims point to some pretty significant weakness under the surface. This probably sounds super familiar, right? The source uses this quote to show the conventional wisdom that a lot of financial managers have. Gold is risky, it's speculative, and hey, it doesn't pay you a dividend like a stock does. It's just a rock. But then, right after showing us that mainstream view, the analysis hits us with this. According to its data, ever since the US dollar was taken off the gold standard back in 1971, gold has actually been the #1 performing asset. Yeah, you see that right. It supposedly outpaced even the S&P 500 and the Dow, with all the dividends reinvested. It's a point designed to completely flip that old assumption on its head. Okay, the next piece of this puzzle focuses on the Federal Reserve itself. Now, it's really important to remember that one of the Fed's main official jobs is to maintain stable prices for the US economy. That word stability is key to what comes next. So to define that job, the source brings up this quote from economist Dr. Judy Shelton, who has a very literal take on it. She says, hey, if prices are truly stable, they shouldn't be changing. In her book, that means 0% inflation, period. And this is where the argument really clicks into place. The source claims that by officially targeting 2% inflation every year, the Fed has pretty much thrown its stable prices job out the window. From this point of view, the Fed is openly telling you that your money will be worth less every single year, which, the source argues, just destroys its credibility. And it's not just about the Fed. The analysis points to these economic signals as more evidence of things being shaky. We're talking massive debt projections, but also a weird shift in the labor market, a big drop in full-time jobs, while part-time and multiple job holders are surging. The argument here is that the economic foundation for the average person is getting weaker, and that makes the whole system more fragile. Okay, so that's the picture painted here in the US. But the argument doesn't stop at the border. In this next section, we're going to zoom out and look at the global stage to see how the rest of the world is supposedly pivoting away from the US dollar. This chart is meant to show a pretty historic moment. For the first time since 1996, the world's central banks, as a group, now hold more value in gold than they do in US treasuries. The analysis presents this as a loud and clear signal, a real loss of confidence in the dollar as the world's go-to savings account. And according to the source, this pivot isn't just happening by accident. It points to some very strategic moves by alliances like BRICS. That's Brazil, Russia, India, China, and their partners. They are actively building their own financial plumbing. The whole goal is to create a parallel system for trade that doesn't rely so heavily on the US dollar. So if these shifts are really happening, both here and around the world, the next question is obvious. Who's acting on this information? This section dives into the source's claim that the so-called smart money is already placing its bets, way before this becomes front-page news. The key idea here is all about timing. The analysis claims that the biggest players are quietly stocking up on hard assets, basically front-running what they see coming down the pike. And all of this is supposedly happening while the average person, the retail investor, hasn't really caught on yet. So who exactly is this big money? Well, it's not just one group. We're talking about central banks. huge commercial banks, big corporations, and of course, the ultra-wealthy. According to the source, these are the players who are already repositioning their portfolios. And all of this, of course, leads to the big question at the heart of that parabolic prediction. If this huge rotation of money really picks up speed, just how high could something like gold go? Let's see what the source says could drive it. The analysis points to a few key things that could fuel a major repricing. You've got a falling dollar, a loss of confidence in the Fed, and that giant capital rotation we've been talking about. It also highlights investors wanting to get out of bonds that have a negative real return, where the interest you earn is actually less than inflation, so you're losing money just by holding them. So, what's a potential number? Well, the source highlights a pretty staggering calculation reportedly from Goldman Sachs. Get this. If just 1% of the money that's currently sitting in private U.S. treasuries were to move into gold, it could push the price to $5,000 an ounce. Just 1%. Okay, this brings us to our final and probably most important section. What happens next? If this whole idea about a great capital rotation is right, what does that actually mean for the average person's financial future? The main takeaway is presented as a pretty blunt warning. The argument is that these huge financial shifts, they happen quietly at first. The big institutional players move their chess pieces around, and by the time the trend is obvious enough for you and me to notice, the biggest gains might have already been made. And so this analysis leaves us with a final, pretty provocative question. It's not really a prediction, but more of a thought experiment about what happens next. If the value of your money starts to slowly melt away, at what point do you notice? And by the time it becomes obvious to everyone, is it already too late to do anything about it?